Hello, everyone. Nationwide, home prices are up 36% since the beginning of the pandemic, and in some areas, they're up as much as 50%. As interest rates continue to rise rapidly, home affordability is even more challenging for Americans. Meanwhile, demand for apartments was already strong before the pandemic, and now it's even stronger. Apartment rent growth is up year over year, about 18% nationwide, and we continue to experience record low vacancy rates for apartments. So apartments have proven to be one of the most resilient performers during a pandemic and through our inflationary times, and we feel it to be one of the best positioned sectors today. Now at SMK, we're consistently saying no to aggressively underwritten investment opportunities. They come with higher risk. What we are looking for are investments that have something special, where we can significantly reduce our risk and still earn very attractive returns. So I'm quite pleased to share with you our latest multifamily portfolio opportunity. This investment is truly a rare and one-of-a-kind opportunity that checks all of our boxes, and we're unlikely to come across anything similar anytime soon. So as you review the details of this opportunity, there are four main characteristics of this portfolio that make it so unique. I'm going to quickly share my screen and review these with you. Okay. First, diversification. We love the reduced risk that we're getting from accessing such a diversified portfolio of over 25 properties with 6,000 apartments in 15 states. Now, keep in mind, this portfolio has taken about a year and a half to create, and we're going to be some of the last capital in, which of course helps reduce our risk. Second, very attractive cost basis. Now, many funds increase their net asset value on a quarterly basis. REIT pricing adjusts daily, but this is not the case here. We have an advantage. We are able to invest in the properties at their initial cost. And I just can't stress the importance of this enough. Here is April data from Green Street Advisors showing apartment values are up 28% in the past 12 months. And three of the largest public REITs in the apartment space have seen average increase in valuation of 35% since the beginning of 2021. Meanwhile, our portfolio consists of 10 properties with more than 2,700 apartments that were acquired more than 6 months ago. Also, we have 4 properties here with over 1,200 apartments that were acquired over a year ago. So we as investors in this portfolio have an immediate benefit. We're stepping into a tremendous amount of value that's been created both through value add measures at the property level and stepping into natural market appreciation since the first property was acquired in February of 2021. Okay, let's keep going. Number 3, conservative underwriting. We feel the portfolio has been underwritten very smartly, which of course helps reduce our risk. And this is critical for us to see in today's marketplace. Some of the takeaways here: we have a projected 50 to 100 basis point increase in cap rates, which is an important data point. It really helps us feel confident in the projected returns as we're essentially expecting future market volatility. Next, across the portfolio, we have conservative rent growth projections in the low single digits, which in many markets today is well below what we're actually experiencing. Lastly, and maybe one of the most important points, is the debt across the portfolio is quite conservative. We have a loan to cost as of Q1 of 2022 of around 62%. Further, 72% of the portfolio is financed through fixed rate debt with an average interest rate of a little over 3.5%. Again, keep in mind, many of the properties in the portfolio were bought and acquired before the recent increase in interest rates. And it really gives us as investors a very attractive interest rate and a lower cost of debt that is largely no longer available today. Lastly, and maybe one of the most important and attractive characteristics of this investment is our operating partners. They're one of the best in the business. They've got over 34 years of experience, over 650 employees, and they've transacted in over 3.5 billion of assets. They currently oversee more than 30,000 apartments nationwide, and their track record, speaks for itself, with fully exited projects yielding an average of 2.2 equity multiple net to investors, essentially more than doubling their investment. Lastly, they also co-invested about $10 million across the fund, greatly aligning their interests with investors. So we're really excited to be investing with such a pedigree operating partner. Now, I hope you found this brief introduction helpful. We do expect this opportunity to fill up quickly. So if you're interested, please keep some of these points in mind as you review the details. And as always, reach out with any questions. We're happy to help. Thank you.